Hello traders and welcome to another video review. Today is Thursday, July 18th, 2024. Let's find out what is going on the economic calendar for today. I have marked the very important and the medium important events for today, and as you can see, we start from the Asian session. Japanese data in form of the exports, trade balance and adjusted trade balance were mixed bag of data. Especially exports decreased from 13.5% to 5.4%. The employment change in Australia, on the other hand, increased from 39,500 to 50,200. So that's a nice improvement in the employment change in Australia. Unemployment rate hikes from 4.0 to 4.1%. Climate count change data from the UK had been published at 8 o'clock, and they beat the expectations of 23,000 with the 32,000 actual number. However, it's still worse than the previous number of 51,900. Unemployment rate stays at the same level of 4.4% in the UK. The key event of today is the ECB interest rate decision and deposit facility rate, which is scheduled for release at 2:15. And as you can see, the market participants expect the ECB to leave the interest rate at the level of 4.25%. ECB monetary policy statement will be released at 2:15 as well. At 2:30, Philadelphia Fed manufacturing index from the US together with the Philly Fed employment and initial jobless claims data are scheduled for release. The Philadelphia Fed manufacturing index is expected to increase from 1.3 point to 2.7 point. European Central Bank press conference is scheduled for release 2:45. And then we got the ECB President Christine Lagarde to give a speech at 4:15. Then at 10 o'clock we got the TIC net long-term transactions from the US, and at the end of the day the Fed's balance sheet will be revealed at 10:30. So the ECB data, interest rate decision and the other data are the key event of today. Remember, 2:15. Let's find out how the euro dollar looks like ahead of the ECB interest rate decision. Ahead of the ECB interest rate decision, the euro dollar made a new swing high at the level of 1.0949, and it's consolidating the recent gains around this area, which is visible on the 30-minute chart. So we can now delete our Fibonacci and switch back towards the 4-hour chart. As you can see, this is the last swing high, and we are heading towards 1.1 level. So this is the next target for bulls. This level here, 1.0917, will now become a technical support, and the reason for that is that because it was the technical resistance not so long ago. On the 4-hour chart, the euro dollar is keeps trading above the 50 periods moving average, and of course above the 100 periods moving average. The momentum is strong, is possible, but it keeps, as you can see, it keeps going above the level of 70 and then keeps going lower. So if we get our arrow, we can see clearly that since this peak here, since this high here, we got the situation when the momentum is apparently decreasing, maybe not substantially, but still it is decreasing. And if we get the arrow here, we can see that the market keeps making higher highs. So we have a clear bearish divergence on a 4-hour chart, so we should be prepared for this market to pull back substantially soon, right? Maybe the ECB interest rate decision will be the trigger for the market participants to move lower, to pull back from the current levels towards the substantial support like 1.0853, 1.0847. However, for now it's not that much visible on the chart, so please stay focused, stay disciplined during the euro dollar trading today, because it looks like there might be some kind of a spike to the upside during the data release, and then there might be some sort of the movement to the downside as the bearish divergence is waiting for the resumption. Now let's switch to the British pound because of the UK data. As you can see, we just made another swing high. Another swing high was made at the 1.3043, and this looks like a harami candlestick pattern on a 4-hour chart, and the market right now is in the pullback mode. We are testing the intraday technical support at 1.2995. we just broke below it, and the next technical level, intraday technical support, is located at 1.2948. Please notice the similar situation that we have here and that we have on the euro dollar. We keep making lower highs on the RSI indicator, on the momentum indicator, and we keep making higher highs on the chart. So we have again bearish divergence between the momentum and the price. It looks like this market needs a substantial correction to the downside as well. Please notice the fact that the key technical support still remains at the level of 1.2865. As long as we trade above this level, the outlook remains, of course, bullish, with a potential target at 1.3142. Now the momentum is still above the level of 50, but only at the level of 58 points, so it's not that far away from the neutral level of 50. That means if the market will go if the momentum will go lower, of course the market will go lower as well, below 1.2947 possibly. So that's the situation on the British pound. Because of the recent data from the Australia, let's just see the Australian market. This is the Australian dollar versus the US dollar 4-hour chart. As you can see, after the data were published, we went lower, but we are sitting still above the 100 periods moving average on a 4-hour chart, which is located now at 6,723. Moreover, the whole market is located is trading right now between the 50 and 100 periods moving average, 6,758, 6,723. So this is roughly 25 pips area here. Nevertheless, we need a decisive breakout from here to see where this market can go, either to the upside or to the downside. The prevailing trend looks more bullish than bearish, looks more up than down, because we got some higher highs and higher lows. However, there's nothing like impulsive market rally, impulsive market cycle on the 4-hour chart on the Australian dollar to the American dollar, and the momentum got juiced rejected from the level of 50. So the RSI turned back towards the level of 40. Now they are trying to move back up again above the level of 50, so we can see the upside breakout. However, nothing like this took place just yet. The market is still between this 50 and 100 periods moving averages. And last but not least, we have to talk about the Bitcoin. We have to talk about the Bitcoin because the reason is very simple. We just made a pullback towards the last technical support. This technical support was located at 63,850, and after the period of the consolidation, the market now is trying to move back up again, despite the fact that the momentum is still below the level of 70, and right now it's on the level of 64 points only. Nevertheless, we know that we're still missing the wave 5 to the upside. So if this zone here, 66,409, 67,292, is violated, clearly violated, the extension to the upside in form of the wave 5 is ready to progress. So please keep an eye on the current situation on the Bitcoin. It's still bullish, the momentum is still positive, the bulls are still trying to move higher on the short-term chart and try to resume the uptrend. However, big obstacle ahead of them, big supply zone. Let's see how the market will deal with that situation. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.